Good afternoon, everyone. My name is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis on the market, trade ideas, and mechanical systems since 2003. All right. This video will be a detailed newsletter analysis of the market for the current time of this recording of the video, Sunday, September 26th. So let's go and get right to that. The way I do these newsletters, I provide a video, a YouTube video, and I also do a standard newsletter that is on a web page where you can get live charts and stuff like that. I provide both formats, so this is my back end. So let's go ahead and hit this and get this recording started for the web page. So again, this will be a detailed newsletter for Sunday, September 26th, 2021. All right. Again, I hope everyone had a nice weekend. It's Sunday afternoon, about 4 p.m. Eastern. And again, this will be detailed analysis of the market. If you're new here, these weekend newsletters, especially these video type formats, can be up to an hour long. We're very detailed. You can see by the table of contents, we cover everything from the general market to news items, indicators. We look at various important indicators, bonds. We examine all the sector charts. We look at quite a few commodities. We look at some currencies and cryptos, precious metals, and I will follow up as well with trade ideas, recently triggered ideas. I didn't add any new setups here. I may do that later today or this evening on the trading community, okay? All right. Below here, I have my quick comments on the market. You can pause the audio of the newsletter or the video, whichever format you're watching, and read this. I'm not going to read it all verbatim, but basically, as you know, the market had a nice correction from, in the September timeframe, and last Monday ended up making a nice low, and the market recovered pretty nicely from Monday of last week. In fact, all the major indexes closed positive, except for the NASDAQ 100, which, being only down 0.02%, basically flat. All right, so pretty nice recovery for the week. Guys, it's really pretty simple. Either that was it for the correction and the lows are in place. It was simply an ABC correction in the uptrend. Maybe it was some sort of fourth wave pullback, and we're going to go and make new highs, new all-time highs. All right, that's one possible scenario, and it's very valid. The other one is that it was simply an ABC correction of we're going to make a lower high. All right, lower highs can have a pretty decent retracement. Heck, just look back last year in October, and I'll show that when we get to the charts below. And then we come back down again. Even under that scenario, I don't view this as a big strong. Wouldn't view this as a big strong correction. I would view that as a buying opportunity. Okay. As I then think the market will have a decent end-of-year rally as typical. Okay. Next areas of resistance, at least for the S&P, we're over the 50-day moving average a little bit, and the 61 fib would be, say, there's some broken uptrend lines on the daily charts, which I'll show, and a 20-day moving average. Also, on a move to the downside below 43.95 would be an overlap for the bullish scenario and would negate it. Okay. One thing Steve pointed out last week was, and this is something to monitor going forward, guys. If you're at the, you go to the store, it's hard to find some things. I mean, I know a contractor friend of mine even having trouble finding liquid nails sometimes. And that stuff should be like toilet paper. It should be readily available all the time. You can't buy graphics cards. You can't buy PlayStations. It's hard to buy cars, chip shortages. There's all these shortages, and there's shortages with labor. All right. Go to your local McDonald's and you'll see a sign that says, hey, we're short-staffed, whatever. So several of these companies, SHW, Triple M, Disney, FedEx, Nike, have all warned that their next earnings are going to be negative because of supply issues or labor issues. So if that builds, if that contagion builds, then that could be a reason for the market to have a bigger correction next time, okay? So just be aware of that. Also, some of the mechanical systems have recently done well. I'm going to take those, show you those, like the SPY systems and the McClellan systems. Let's go ahead and move on to the charts. So the first thing before we get into the market, let's talk about these mechanical systems. So the SPY systems, on Friday, they closed out the rest of their systems. The QE well, closed out on Monday. Friday morning would have been better to hold for the day, but still winning trade from the first entry to the second entry. The trend pullback systems, I have two of them. There's one that's the original one that holds a little longer, and the one that has the aggressive exit. The aggressive exit exited, I think, on, it's hard to see here, maybe on Thursday, and the original system exited on Friday. They both had second entries. The first entry was a slight loser, only a slight loser because of the rally. In fact, I think we had, if you're holding SPY here, you got the benefit of ex-dividend. So you'll be getting the dividends. So that makes this almost an even trade. And obviously the second entry is there where we double up on. We double up on the position size. We're nice winners. Okay. The CCI system, which I didn't officially send out because I didn't see it, that also gave a nice trade. That would have went long on Tuesday. Great trade. So what I do with the SPY systems, guys, these are reversion to mean, meaning they buy pullbacks and statistical uptrends. They short rallies and statistical downtrends. They look for trade opportunities that are high probability. They get in and get out. They're mostly in cash. Okay, they're not trending type systems. That's what they're meant to do. All right. You can see the short systems haven't been doing any trades this year. All right. So, kind of lost my train of thought there. Sorry about that. Anyway, I have now I know what I was going to say. So there's 21 to 22 of these subsystems. I have them spread on these charts. Like I have 10 subsystems on this one chart. I have 9 here, and then some of them I have separate, like the CCI system and some of these trend systems. Okay. Next. So here's the systems individually, for example. So here is the longs. You can see there's 12 of them. All right. You can see some of the names. RSI oversold. I don't send them out this way. Right. I put them on that chart I showed you above so that we don't have as many trades. All right. So I'll put a bunch of them on one chart, and then I'll put some of them individually. But here's all the individual subsystems. I'll do a separate video sometime, and we'll look at the various statistics of these 12 subsystems. Again, they're all looking to do various things. Where is it? One of these is called a bear long. Obviously, we're not in the bear market, so there's not going to be many trades in this thing, until we have, a good hard correction. Next. Item number 4, this shows you the 9 short subsystems. Obviously, no trades been going on here. Next. Image number 5, this table. So I closed out the rest of the trades on Friday. So here's the trades going back to June of last year. And you can see some of the recent trades here. Because we got that original dividend, that actually makes this first entry pullback trend basically break even. Okay, that was in there for 13 days. You can see I have the number of days here. So you can get an idea of how long these hold. Some of them are pretty quick. Here's a date when it only held for a day. Some of them hold for 3 weeks. This one over a month. You can see this one a couple weeks. All right, but you can see CCI trade, QEBTS pullbacks, all nice trades. A couple losing trades here and there, but it's done pretty well since last year. Next, image number 6. This table shows you the option trades. All right. And you can see how those did. So the first entries lost a little bit. The second entries obviously made money, more than made up for your losses there. So option trades been pretty good here. Okay. For the option trades, for the second entries, we double up. On the ETF trades, we use the leveraged ETF. Okay. So we use SPY for the first entry, SSO for the second entry. Next. Let's go ahead and move back to the general market. So here's the index sector table, what transpired last week. Again, you can see major indexes recovered almost everything except for the NDX 100, which essentially did, basically flat. All the other indexes are up about 0.5%. Nice recovery from Monday's lows. For the week, the major market sectors, most of them recovered here, with energy having a good week. Banks had a great week. Some weakness in utilities. By the way, utilities is something to watch here. It has been down 12 days in a row. Statistically, it's due for a bounce. Okay, so watch that. Metals and mining been getting kicked. Real estate, not surprising. Currencies, U.S. dollar continues to hold up well. Crypto got nailed last week, as you can see. We'll review those charts when we get below. You know, there was some recent news with China. They continue to clamp down. Commodities, all mostly to the upside, except for corn. I doubt too many of you are trading corn, but everything else up nicely. I mean, wheat, coffee. Coffee's coming out of a nice coil. Nice moves in all these energy areas. Precious metals, though, continue to get hammered. And we'll look at that below. But, man, that area has been ugly. Bonds, both bonds were down last week. We're also going to look at the 10-year Treasury yield this week. Next. Item number 8 shows the economic news calendar. Last week we had the FOMC. The Fed, did talk about eventually raising some rates, barring, they need to see conditions to do it. But basically they were dovish. Okay. Here's the news for this week. Obviously tons of news for the week. And so potential market making news. We'll see how the market reacts to all that. Let's go and jump into the index charts. First off, we like to look at the bigger picture charts. So here's the quarterly view for the major indexes. We looked at that the previous week. So we want to look at this again. And remember, the quarter ends this coming week on October 1st. So a week ago, I was wondering what these candlesticks on the weekly would look like. I said if they ended with doji candlesticks, that would be potentially a warning. As you know, we've just had this crazy momentum move since that time frame. I mean, look at this. This type of uptrend is not sustainable. Eventually, we're going to be due for some sort of consolidation, before another rally. But again, can that go on for another quarter or two? Perhaps. But eventually, this is, again, unsustainable in the long term. So we'll see. But right now, with the rally last week, the candles look a little bit better. Again, we'll see how these look when the quarter actually ends, if we're to get a little pullback this week or not. Obviously, we have potential end of quarter window dressing. So, the market could easily hold up this week. Would not surprise me. Next. Chart number 10. Here's the monthly view of the indexes. Clearly, we had a pullback for the month. It was definitely due. We're obviously well off the lows. Again, we'll see how these look by the end of the month. But, the S&P, for example, was up 7 months in a row. So it was due for some weakness and, typical seasonality in September and early October. Next. Chart number 11, here's the weekly view. You can see how, we've been, especially in the Dow, we've been in this little correction for, a good month or so. Bounced off the lower Bollinger Bands. All the indexes off the approximately the middle Bollinger Bands last week. The NDX here bouncing off this uptrend line going back to March of last year. So important support. The IWM small caps have been stuck in this range since March, this big horizontal rectangle pattern. Next. Chart number 12, here's the daily view. So again, we're starting from the higher time frames, looking at the lower time frames. So nice recoveries. What I'm watching for in the short term here, on the S&P, you have this uptrend line going back to November. There's, this potential uptrend line is now resistance. We'll see if it stalls out there. On the NDX, this is resistance, this trend line. So we'll watch those. Again, we're going to look at these indexes individually below. Next. So here's a real simple guide, guys, that we like to show. So let me move this chart. What this is this is the weekly indexes with these DVTs. Think of them as higher lows. All right. And they've been pretty good. They've done a good job. Obviously, the market's had a heck of an uptrend from the March lows of last year. And it's resulted in these higher low DVTs. And on this last correction, these were not hit. So a longer term person, that maybe they're out golfing all the time. They don't want to look at the markets. They rarely want to make a change. These are, potential guides to use for a 401k and an index. None of these have been hit. All right. Let's move on. Item number 14 below. Let's move this over. Here's the S&P monthly. Again, after 7 months in a row, we were due for a little down month. Again, we haven't closed September yet, though, so we'll see how this ends. Next. Chart number 15. Here's a monthly view showing these two moving averages, the 8 and 12 or 13 EMAs. Those are both fib numbers. And you can see, again, it's not perfect, but over time, they've done a pretty good job about catching these major secular trends of the market. You could see since the 2000, they triggered bearish in early 2008. It's a good exit. And, since the 2010 timeframe, every pullback is basically pinched. All right. Now, what I want to point out here is look how wide they are. Remember, guys, the way the markets go is they go through periods of, it's like a wave, right? You go through an uptrend, then you go through a consolidation, uptrend, consolidation. The period of trending, consolidation, trending, consolidation. So, these, these moving averages will get too, let me clear that out here. Get too stretched, right? And see these periods. Look how stretched this is. It's super stretched. So this is an area that eventually will need a consolidation period, right? Again, whether it occurs now or maybe early next year, who knows? But eventually we will have a consolidation period. That is unsustainable. Again, very logical to understand. Next. Image number 16. So keeping up the same theme. This is the chart that, basically shows you the same thing, the monthly view of the S&P. The thing I like to look at is this moving average band. Again, it goes through periods of consolidation, expansion, consolidation, expansion, consolidation, and it's so dang wide here. I don't remember ever seeing it this wide. So eventually it's going to need to contract. All right. Remember, this is a monthly chart. So, when that occurs, we'll see. This is not something you time your daily trade off of, but eventually this will need a consolidation. And when it does, it may take a year to work this off. That is something to consider. All right. Next. Here's the weekly view of the S&P. Last week, pullback tested this 20-week moving average. Now let's go and move to the shorter term charts. So what am I seeing in the short term? Here's the daily chart. I've been showing this chart for a while, for the last few weeks. This year we've had these shallow pullbacks to the 50-day moving average, and then recovery to new highs, recovery to new highs, pullback, recovery to new highs, right? And quite recently. This time, all these pullbacks too also either tag the 50-day moving average here, which is C in red, okay? Or undercut it by a day or so. This time was a little different as we sliced through the 50-day moving average. Now this moving average here is the 100-day moving average. So we basically went a little below that and recovered. So the difference this time is we went well below the 50-day. Now again, really nothing's changed here, guys. And I know people hate this, but the low is either in, where this was simply an A, B, C correction, and we're ready to go to new highs, or this could still be a correction that we're in. This could be A, B, C of A, this A right here, okay? And this is over a B that's going to form a lower high, and then eventually, come down again, and then bottom, and then that would be a decent, this would be a hell of a buying opportunity. So this is either it, or, this was it for the correction, and we're eventually just going to go to new highs, all right? So again, we'll see what happens short term. I want to see what happens around this 20-day moving average. There's an uptrend line here to monitor. And Couple things, the indicators here. MACD did go firmly below 0, so that's a negative. The 60 stochastics did go below 50, but it did not confirm. I'll do a video on what I mean by that. Let's move on. Chart number 19, here's another daily chart. So here's an uptrend line here. The point, these numbers here represent the point pullbacks from the highs. So 240 points off the highs here. Roughly similar to that one in March, especially from a percentage standpoint. So here's a couple things. This uptrend line here is resistance. And notice these two thin trend lines here. These are parallel channels. Someone on the trading community blog, Roger, posted that, so I thought it was a good thing. So this is your resistance, guys. All right. With it being into quarter, it could be, that is way too big. Let me get rid of that. All right. So either within a quarter, we rally up a little more, tag this area, come down. Or we just, you know, do something like this. We'll see. Be an interesting week. You're going to see how the market, if we do push higher, reacts around this area. Okay. Next. Chart number 20. Here's that longer wedge we showed, which measures way down to here. Notice you got a big support down here. Now, what I said is that these corrections, if this is still wave B, can unfold in a variety of ways. You can see this longer wedge trend line goes back to September last year, or actually October, November. So it allows for a further rally to push up to here and then come down. Okay. So even if we push a little higher early this week, unless we just break through this, it could still be this lower high. Also, look what happened back here last year. Let me draw that in. You had your initial sell-off, which was an A, B, C of A. You had a big lower high B rally that occurred all the way into early October, and then a sell-off. So this whole thing was a big ABC before eventually. So that's why it's still too early to say if the bottom is in or not, guys. Okay. This is markets about probabilities, and looking at. You can have your opinions. It's you predict, you monitor, and react basically. Let's move on. Let's move to the intraday chart. So these vertical lines here show you some areas where the NYSE tick indicator spikes above 1,000 and 1,500. So these have been pretty good support resistance areas. Obviously below here, these are big supports like this 44.15. These are resistance areas. Let's move on. Chart number 22, here's a 60-minute view of the S&P. It breaks down this potential wave count a little bit. Again, where we had this 5-wave uptrend here into early September. We were looking for a correction. The moving average ribbon flipped to a bearish configuration here. By the way, right here, this first, I don't know why my program does that. All right. Right there, that first pinch, very good shorting opportunity on this bounce. So anyway, you had a 5th wave here, sell off, you broke, moving at the ribbon broke here. You could count 5 waves down here pretty clearly. So then that could have been a wave A. You had a lower high wave B. The bullish view is you put in wave C down here, which ended the correction. If the correction still unfolded, that was ABC of A, which I talked about, like here. That's why it says A or C, question mark. Notice under the bullish view, you can count 5 waves here. A, B, C, or 1, 2, 3. Here, moving below this, 43.95 would negate a bullish. Would negate any, bullish view on the market. Okay. A couple other things. Look, moving average ribbon. Here's what I like to show, guys. See how wide it got here? When it gets too dang wide, right, you're due for a better bounce, and that's what happened. Whenever I saw this moving average ribbon so wide last Monday, I was thinking that we'd have a pretty decent bounce, and that's what ended up occurring here. You can see otherwise, 61.8 fib here, which were closed right around. These are your next big resistance areas. Next. Chart number 23 is a 15-minute view. Again, here's that 43.95. Steve put in these wave counts. You can see potential like wave 3, 4, if we push higher, wave 5. Big resistance right here. That's the next one really to look at. 44.86, 44.90. Next. Moving to the KISS charts. So here's the KISS charts for the S&P. Steve talked about this a little bit last week, so I'll do a separate video on these. So on the daily here, ATR is something to monitor. Let's see, 44.83. Notice how that matches very closely with that resistance I just mentioned above. So on the daily here, there's two versions of the S&P. We have one version that shows the KISS system going back long on Thursday. Like I said, guys, this stuff is an exact science. Here's your DVT if you wanted to be back along. Okay. I'll do a separate video on this, like I said. Next. Here's the 2-day KISS. We tagged that weekly ATR. And there's a variety of ways to trade this stuff, guys. You can see this 2-day DVT would have hit on this low. But again, it kind of depends on what you're doing. I know one guy, again, I know plenty of guys who follow just the weekly, which were not hit. I know another guy who follows the 2-day, but he wants to see it close below the 2-day. So he'll give it 2 days. So it didn't close below there. So he's still long despite following this. Other people may just want to use a price tag of that. Is it out? It just depends on what you want to follow. Next. Here's the various cycle time frames. So daily S&P. Again, ATR here, possible resistance. These 60 stochastics did bounce off that 50% area. It's an important area. Lower time frames. Whenever you see these moving average ribbons, well, this pinch here was a low risk short opportunity last week. And you can see, or the previous week, and then last Monday on that sell-off, you can see how wide the ribbons got. When they get so wide like that, you do for a pretty decent move and bounce in price, reversion to mean, and that's what we got. You can see also on the lower time frame, 120. You get it to mark 13, see how wide it was here. There is a resistance here, this resistance cycle. Next. All right, guys, sorry about that. I had to remove a couple charts here that were messed up. So moving on to the Dow, here's that wedge pattern. You can see that that wedge pattern did play out with a divergence. All right. It actually, remember on a wedge pattern, the initial target is taking the back of the wedge, subtracting it from that. And it did achieve that. So now we'll see what happens. Again, this broken trend line of the wedge, though, is resistance. Again, overall, you do have this weekly wedge with divergence. Next, here's the Dow. Like I said, the Dow broke this uptrend line in early September, earlier than the other indexes in the 50-day. Moving down, got near this big support zone. Remember I talked about this support zone a couple weeks ago? Didn't quite tag it, but we got close to it. Rallying up. So this here now would be some resistance to monitor this week. Next, chapter 29, triple Qs weekly, down 0.02%. Nothing major change there. Nice recovery off the lows. Next, chapter 30, here's the daily view. Again, we got near this support I talked about, rallied, we recovered this one. Oh, we'll see. We're going to form a lower high, or is that it? We'll see. Nice pinching moving averages here on the underside. Next, chapter 31, here's the 60-minute time frame. All right, let's go ahead and look at the KISS charts. So here's the daily KISS chart. Again, the daily was hit on here. ATR resistance above here. Now the 60 stochastic did hold that 50% area. So one filter I've talked about, guys, sometimes that, if you're long via this, but if this 60 stochastic was close enough to here, you could consider just staying long, right? I have a bunch of various filters and rules. And again, I'll go over that in a separate video. Right now, the moving average ribbon here, you can see it's punching it from the underside a little bit. Next, Chart 33, here's the cycles. So we did a buy cycle on the daily, which played out last week for a bounce. You can see we've rallied up to this ATR here. That's resistance. See how wide the moving average ribbon here was, though, with the BPTMA. So that told you we'd probably have a decent bounce after last Monday's low, and we did. We're at resistance now. Next, Chart 34, Russell 2000. Again, been in this horizontal rectangle pattern. If this were to break out of this could start another up leg in the market, just because it's had such a long consolidation here. The longer something consolidates, the more energy it has to have a big pop. Kind of like this. This was a really long resistance. Once this was taken out, it allowed for a big rally. Here I put a little downtrend line in the pattern to monitor if it could break that. Next, Chart 35, here's the daily. Again, just sideways chop. Recovered again off the lows last week. Next, Chart 36, here's the 60-minute chart. A couple weeks ago, I talked about this open gap with being a magnet, and it was. We filled that open gap and then recovered. All right, guys, that does it for the indexes. Let's look at a few indicators. Chart 37, here's the VIX. So the VIX gave a Bollinger Band buy signal last Wednesday. It was above the upper Bollinger Bands and closed back inside the Bollinger Bands here. That ended up being a great trade. It occurred right here. Should be an arrow here. But you can see the previous times this year when this has occurred. Boom, boom. All these nice buy opportunities. This one here led to, just a small push. But all these have been pretty good buy opportunities. That's something we've showed here for quite a long time. If you wanted to get back long in the market, that could have been a trigger, for example. Next. Chart 38, here's a 60-minute view of the VIX. One thing I am monitoring here, it does have sort of they're just trying to form a little divergence here. I'm going to see if this starts to curl up or not. Otherwise, downtrending. Nice sell-off last week. Next. Chart 39, here's the VVIX. This has been a great indicator. It gave a warning signal, early warning, back here on September 7th when it crossed above 110. Remember, this 110 area is called the VOMA line. Whenever it crosses above 110 is the time you want to get cautious. That was a great warning. Market sold off. It is now firmly below 110 here. So it is reset, recocked. So in the future when it goes above 110, then we'll pay attention. But right now, nothing new. Next. Now, chart 40, here's the VVIX with the Bollinger Band. So just like the VIX, I noticed that this gives also very reliable buy signals when it closes outside the bands and back inside. So instead of just using the VVIX as a sell signal when it crosses above 110, we could use it as a buy signal with the Bollinger Bands. So this closed back inside its Bollinger Bands last Tuesday. So better than the VIX Bollinger Band by a day. The VIX one went long here. So look how well these signals have worked. So here's another little system for you. All right. Next. Chart 41, here's the Dow McClellan oscillator system. This gave a trade last week on Monday. Gave a nice winner. Gave a trade the previous week. Gave a trade back here. The fact that this kind of washed out here was a positive for the market. Next. Here's another little oversold type of system you guys can use. This is the breadth thrust. Now, we're not going to focus on the breadth thrust. That's when this indicator goes from this area, oversold, overbought, within the rules are here within 10 days. All right, or 9 days. But what we're showing is whenever it gets oversold, it gets pretty good buy opportunities. You can see all these this year, and this got oversold recently, so it gave a nice trade. All right. Again, we provide you the live chart URLs so that you can use these on your own. Next, chart 43. Here's the AAII bull bear. I haven't showed this for a while. It's actually negative. That could be a positive for the market too. That means there's quite a bit of bears out there, and you can see you had declining bulls during the summer. So it's basically like a contrarian indicator. Next. Moving on to bonds, here's J&K high yield corporate, continues to hold up pretty well. If this were to rally to new highs, then that would be, bullish for the market. You can see that little correction. It held this previous resistance, became support, a tenement and technical analysis. Next, Moving to the 20-year TLT, nice sell-off last week, down 1.5% after the FOMC, right off this resistance. Next. Chart 46, here's the daily view. It's been in this kind of ABC type consolidation for 2.5 months here now. Next. Chart 47, here's the 10-year Treasury Yield. So rates have started to move up, despite the fact the Fed is holding pat short-term rates. Be aware of that. Next. Chart 48, here's the 10-year weekly. Again, I've been talking about that I was looking for this to form a higher low. You had a moving average ribbon pinch here. You can see how, here's how I like to use these moving averages, guys. They flipped bearish here, and then your first pinch, that's the bearish one. Then it flips back bullish here. Then I look for this first pinch as a potential low. And you can see so far we've rallied. MACD approaching zero. If this were to start rallying up strongly, that could spook the market a bit. Let's look at some longer term perspective on rates. And also give you a little educational view. So here's the 10-year Treasury Yield going back to the 1970s, so a 50-year chart. As you know, those of you older than me may have had an mortgage rate in the teens back in early 80s. 15.8% is a high back here in early 1981. Anyway, here's your linear chart. You could draw a downtrend line from, say, 1987. You can't draw a downtrend line from here, right? If you try, notice that there's too much space here. It's not a valid trend line. So you have to draw it from here. So getting over about this area could signal that this secular bear market in rates, which we've been in a secular bear market in rates since, for 30 something years, would be over. All right. But again, how long is it going to take? Is it going to do something like this, then break out? We'll see. But longer term, this is something I expect to eventually occur. Eventually, it's going to break this trend line. Now, let me show you an educational thing. So for the linear chart here, I can't draw a downtrend line from the highs. But if I use a logarithmic chart, I can. So here's the logarithmic chart. Notice I can draw a clean downtrend line from the highs connecting 4 data points. Very valid trend line. So when do you know to use a logarithmic chart? Whenever you had a large increase or large change in percentage of price within that chart. This has moved from 15% down below 1% within the chart. So you need a logarithmic. Okay. So you can see rates need to get over this long trend line eventually, which, may take some time. Maybe something like that. Maybe out in 2022 or 23, who knows, right? But that's when you use a log chart. So I hope that was a little education for you. All right, let's move on. Let's move and quickly look at these sectors here. Go through this quickly. So here's transports. They've been correcting since May. They finally got oversold, bouncing a bit. Not surprised. Now we'll see if they can get over the 50-day moving average. Next, chart 52, financials. They needed to take out this resistance. They did, so that's a positive. That area is now support. Next, chart 53, banks. Also good. If rates, the rates going up could help banks. Next, chart 54, technology. Monitoring this trend line here. If that's big cap tech, if it can clear this, really get over this 158 area, that would be positive for the market. Next, chart 55, communication sector. A lot of these FANG stocks like Google, Facebook, Netflix. Now this has resistance up here at this, trend line. So, it could easily fail here. I'm going to monitor for that potential. Notice the volume. Okay. Next, chart 56, semiconductors. I'm in a choppy uptrend pattern. Next, chart 57, XLE energy. You have this higher low, head and shoulder like look pattern. We did clear some resistance last week. Moving average ribbon is trying to flip here. Next, chart 58, oil services. This hasn't taken out its resistance area. Next, Chart 59, biotech. Again, logical rally off this double bottom support. Stalled at the 200-day. Still struggling here. If one was long here, I think a stop could be right here at this higher low. Next, chart 60, XLI Industrials. Again, it's been in this big range. Recently found support here. Is it going to form a lower high up here and come down again? We'll see. Next, chart 61, materials. Logical rally off the 200-day here, but it doesn't look very strong to me. Look at the volume patterns. More looks like a bear flag. Next, chart 62, consumer staples. Broke this coil to the downside. Still looks weak to me as well. Next, chart 63, utilities have been down 13 days in a row. This is getting quite oversold, guys. May do for a reversion to mean bounce. Too many heads in a row or tails in a row, using the coin analogy. Next, chart 64, healthcare. Double top back here. Broke some support, which has turned resistance. Next, chart 65, consumer discretionary. This looks more bullish. Next, chart 66, retail. Still going sideways here. Here's your trend lines to monitor. Next, chart 67, real estate. Nice correction from here. Little support here. This doesn't offer much support. If it loses that, there's kind of an air pocket. Oh, don't want that. Kind of an air pocket until down to here that it could fall to. Next, chart 68, home builders also been weaker. And let's go ahead and move into commodities, guys. So that's a view of the sectors. So crude, DBC, this is the composite ETF, various commodities in a nice strong uptrend, held support here. Kind of like appears to be in some sort of fifth wave up here. You can see divergence forming, but it's very strong. Commodities have been in a bull market. I talked about that late last year. Next, chart 70, here's the monthly view. Again, broke this monthly trend line back in December and January, starting this bull market in commodities, which were downtrending since 2008. So I think it has changed. Next, chart 71, here's the daily view of that ETF, the various commodities in it. Next, moving to some individuals, here's crude oil weekly view, nice move up 3%. This is your short-term resistance up here at 77.50. Next, chart 73, here's the daily view. We broke this parallel channel a couple weeks ago, pulled back, held this, stayed above the broken trend line, which I said to watch for. Next, chart 74, natural gas, hell of a rally this year, as we know, out of this consolidation. Next, chart 75, here's the ETF, or the daily. We bounced off the 50-day here initially, or the 20-day, I mean. Not surprisingly, we hadn't tested that for a while. Next, chart 76, UNG on the daily also bounced off this 50-day, or 20-day, sorry. I don't think it's just going to go and make another high here, though, guys. Like this, I think it could form a lower high and then do something like this. So just be aware if you're long. That's at least what I'm thinking may happen. Next, chart 77, copper weekly view, well off those lows, still in overall this weekly little channel pattern. Next, chart 78, here's the daily view. Here I added a lower trend line, kind of like a coil forming. This is your main resistance, your main support down here. Breaking this support would, it would allow for it to move down to here. If it can break over this trend line, that would be bullish. Next, chart 79, DBA, agriculture up 1%. Next, chart 80, here's DBA on the daily. A lot of choppiness lately, though. I don't trade DBA much, guys. Back here was a low-risk buy off this double bottom support. Next, chart 81, Joe, the coffee ETF. Nice coiled up pattern. Trying to break. I know a few of you are long this. I own a little bit of it. Next, chart 82, uranium. Uranium was on fire, as you know. Finally, it's sold off the last couple weeks. Not surprising. Again, longer term, it's in an uptrend. It began a bull market here in this trend line weekly break. This was a good buying opportunity back here. When it got overstretched, that was a good selling opportunity. Things ebb and flow, guys. Next. Chart 883, here's the daily view. So my guess here is we're in some sort of ABC correction. If we work a little lower in this C, that's something to monitor, 50-day moving average. This could be a good area down here to buy back into. All right, that does it for commodities. Let's move on to crypto. Chart 84, Bitcoin. So far, we've had an ABC-like correction. That's the bullish view. All right. That would be the bull case. We'll see. I added a little downtrend line to monitor. This is your big support. Next. Chart 85, Ethereum. Doesn't look as good to me. Kind of has a, it's had this slanted head and shoulder look, which lost over a week ago. And that rally up stalled here, lower high at the 9 EMA. Next. Chart 86, UUP, US dollar ETF. Still has a bullish look to it, doesn't it? Kind of ascending triangle look. If it can break out of here, you don't really have, that opens up the door for a move up to here. That would help long-term rates go up. That wouldn't be positive for gold. We'll see. It's got to hold this uptrend line, but for now at least, looks bullish. Next. Chart 87, Euro. Steve talked about this ABC that played out. The bearish views, you have a head and shoulder place here. And let me add that trend line here. So you had like a sloping neckline and it'll work lower. If it works lower, that would be bullish for the dollar. Again, we'll see how this transpires. Next, moving to precious metals, gold. Again, basically flat for the week. It's been downtrending since August of last year. That's your main resistance. This is your main support, which has been tested a couple times. The stocks are underperforming as evident by the GDX GLD ratio. Next, chart 88, here's the daily. So again, what I don't like is the stocks underperforming. It's best when the stocks outperform. And you can just see how dang choppy this is. Guys, this is the hardest area to trade in my years of trading. It's best to look at other things, unless you're a diehard gold bug, right? Next, chart 90, silver. It's been in this 8-point range for, good year and a half. We're now back at the bottom of the range. We'll see if it can find support there. You can see how the break of this coil back test resistance here. Next, chart 40 or 91, silver on the daily. Recently stalled the 50-day here. Back to this long-term support, 22, long-term resistance up here. So this, like I said, this big 8-point range. Next, chart 92, GDX, the miners, the stocks continue to weaken. They lost this support area. There's another potential support right here. We'll see if this can hold or not. Below here, you have the 200-week moving average. Ugly stuff. Next, chart 93, here's the daily view. One thing to monitor is a potential wedge here, but it's got to bounce. It's got to get going. If it sells off like strongly here, this is negated. You do have some divergence here. You have the ratio here. You'd want to see this curl to the upside. Again, this is an area to monitor for a potential reversal, but it needs to reverse. Next, chart 94, GDX on a 60. You can see this little head and shoulder played out. And again, there is some positive divergence here on the MACD, but we need to see a recovery. Finally, chart 95, KL. This is the one that I am monitoring in the precious metal area. If it does bottom, this is the big boy. It is the relative strength out of all of them. You can see it's been outperforming. And while it's not breaking out here, it's holding up damn well, right? All right, now let's follow up with trade ideas. We're going to discuss recently triggered ideas. First off, Apple. One thing I'm monitoring, Apple is a big component of the market, as you know. We had a divergent high recently. Monitor this broken trend line here. That is resistance. So, could Apple rally up to here and then break down? That's a possibility. This is your bigger support. If it can get above here and then hold this broken trend line, that would be a positive. So I know one of my friends, Chinese friends, he was telling me that over in China, he heard that all the Chinese are buying iPhones like crazy. I don't know. That's anecdotal effect. Who knows? But right now I'm watching this trend line. Next. Chart 97, Tesla. Tesla broke out of this range. We've been bullish in Tesla. It's been in this kind of choppy uptrend. My Chinese friend did say, though, that in China, he's been hearing that they are not able to keep up with demand, and they're going to come out with some production numbers pretty soon before earnings, so that could pass the stock. The stock's definitely acting dang well here. Next. Let's follow up with other ideas. So chart 98, PAG. This was a long idea of mine a couple weeks ago. Cup and handle. Look how well this sucker's done. Great trade. Good breakout in volume. Take some profits. Next. Chart 99, Snap. This is a trade idea of ours. Broke out on Wednesday. Nice follow through the last couple days. Next. Chart 100, NCMI. One of my long ideas from a couple weeks ago. These are the patterns I like coming off the lows. Nice base. You can see here 20 and 9 EMA, how they pinched together here. You know, that was a low-risk trade. Volume looked good. This is just a great low-risk trader. It stalled initially at the 50-day moving average and then took it out. Next. Chart 101, Jets. Early last week, I said the airline sector looked potentially bullish within a coil. And you can see it's moved up nicely so far to the 200-day. This is the ETF. Next. Chart 102, JetBlue, one of the individuals. We had a couple other ones as well, which I'm not going to go over, but this is looking better. Next. Chart 103, ETR. This was the tight coil pattern of ours, and it broke to the downside. And look at that sell-off. It would have been a great short. I didn't do it. Wish I had. This is an area to take some profits. Next. Chart 104, blue. This is one I'm still monitoring. We'll notice this bottoming pattern. I'm long a little bit of this still. It still hasn't been able to get going. I want to see volume come into it. But I'm willing to give it a stop right around here, this higher low, inside the pattern. Next. Chart 105, BCTX. This is a new long idea of mine on Wednesday. Cup and handle. Busted out beautifully on Friday. You may have triggered on Thursday on this little Pinocchio break. And if you did and held, boom, nice move. Next. Chart 106, DVN, a long idea of mine from Wednesday. Nice breakout idea. Remember the energy sector, nice move. Next. Chart 107, CVX, also a nice move through this area, another energy oil stock. Next. Chart 108, ExxonMobil, same deal. Next. Chart 109, EEIQ, long idea from Wednesday, this long base, fairly new issue from March, starting to eke its way out of here a little bit. Very volatile sucker, be aware of that, guys, okay? Not for the faint of heart. Next. Chart 110, AUD, long idea from Thursday, gave a trade there on Friday. Next. Chart 111, GALT, long idea from Thursday, gave a trade there on Friday. Again, should the market move higher? This does measure up higher. One way to measure this, guys, let me just show you, would be, say, take a move from here, then you add that same move to here, okay? That's your measured move. Next. Chart 112, E-Core, one from Steve on Thursday. Low-priced one, trying to break here a little bit. Next. As I said, I didn't add any new ideas here, guys. I did carry a few that didn't trigger. So CYTK, this has got a clean resistance from around this 3450 area. This was from Wednesday last week. It never triggered. Still valid long if it can take that out. Next. Chart 114, AMAT, also a valid long if it can take over this area. Remember, this is an idea from last week. Next. Chart 115, Disney, one of those that pre-warned. All right. Sell off, bounce on lower volume. Okay. This is one that looks super bearish to me. I bought some early puts, willing to give it a little room. But, you know, is this bounce in? If it were to sell off again and lose this, this could be ugly. You know, I don't know if this bounce is done. Could it do something like this and then that? But still, it's not a very pretty chart. Again, I will post some other trade ideas later this evening on our trading community blog. Anyway, newsletter here ended up at 55 minutes. So that's it. I need to get away and do some yard work and other things, take a break. Have a wonderful evening, everyone. Take care, and we'll see what happens this week.